What is going on, guys? First off, right off the bat, I'm trying out a new mic setup for this video, so let me know how I sound. Did the old video sound better? Does this sound okay? Let me know. If it sounds the exact same, good enough. Quickly, if you do want some commission-free trades on Questrade or some free stocks on Wealthsimple, two platforms that I both personally use and stand behind, links to sign up will be in the description or pinned comment. Also, come join the Facebook group where we talk Canadian stocks and a bunch of other nonsense. Link to join that will also be in the description and pinned comment. But without any further ado, let's get into it. So I thought I'd do a quick update on my general thoughts on the market. I haven't ever really done one of these on this channel, and I think, now is probably the time to do so. I know a lot of you guys are probably getting hammered right now. It seems like every single stock is just beaten down. And then when you look at the indexes themselves, apart from the NASDAQ, which is down about 20+% year to date, they don't look like they're down that much. So people might be thinking, what the hell's going on? How's the S&P down 10% or whatever? But it seems like my portfolio, all my biggest holdings are getting crushed. It really lately seems like the sky is falling. And especially for you looking at your portfolio, you might be feeling pretty bad about things. So I want to kind of explain what my, mindset is going through this, how I'm approaching this, and how I think you guys can apply this mindset and maybe help your, keep your head on a little straight. Keep a little bit of your sanity. Everyone looks at, the day-to-day prices of stocks and people get emotional about it. And I think that's completely the wrong way you want to do this. People, they buy a stock and they go, oh, it went down. And people freak out and they lose their mind. And, Facebook, the BRP, stocks like this, stocks that I've talked about on this channel, are falling lately. And people are going, they're going down. What are you selling? What are you doing? No, I'm not selling. And let me just explain exactly what I'm doing and clarify things for a lot of people. There's also been a lot of fears on things like a recession, an upcoming big recession. And look, I'm not worried about any of that. It can happen. I don't know if it's going to. If it does, I don't care. I actually welcome it, if anything. And let me tell you exactly why. So a lot of people buy a stock and they don't think about what they're buying. They buy a ticker symbol that fluctuates by the day and they think going up equals good, green is good, red is bad. Like goddamn apes. This is completely just an absolutely toxic, and I hate even using that word. It just seems like an absolutely abused word these days, but it's a really toxic mentality to look at the stock market like that, to look at a stock in a business like that. At the end of the day, it comes down to what are you really buying when you buy a stock? You're buying a share of a business. And so for me, I don't care what the broad economy's doing. If your mindset is, I'm buying a business, I'm buying a share of an actual business for a good price, why does it matter if it falls 10% more tomorrow? And I have people in my comments going on, especially the Shopify videos like that, going, oh, you're catching a falling knife. Well, look, I don't care if it's a falling knife or not. If you see a good business trading at what you believe is a good price, not necessarily saying Shopify's at an incredible price right now. It might be, depending on your assumptions. I'm just saying that for the sake of saying it. If you see a good business trading at a good price today, why does it matter if it falls 10% more tomorrow? If anything, that's cool because you can buy more tomorrow. But there's a couple ways I like to look at this. I don't like to get into timing. I don't like to get into things like, oh, maybe it's going to fall a little bit more tomorrow. At the end of the day, look, what are you buying here when you buy a stock? Like I said, you're buying a business. So if you do projections, you do a DCF, and something tells you it's a great buy today for a certain return at this price, why do you care if it falls 10% more tomorrow? You're getting a great buy right now. You're paying a great price for a great business now. So that's the way I'm really looking at it with stocks like Facebook, and I really want to take this video to go over Facebook stock. It's probably the stock I'm buying the most of at the current moment. I want to go over, my overview of Facebook as a business, show why I believe it's an incredibly well-run business, and why it's a great price. And at the end of the day, that's what I'm doing. I'm buying what I believe to be a great business for a great price. So I don't care if it keeps falling tomorrow. I started buying at 220. I'm down 14% on Facebook already. And I've been averaging all the way down. And if it keeps going down tomorrow, guess what I am? I'm happy. If Facebook goes to 150 a share tomorrow, I'm ecstatic because I get paid tomorrow and I can buy a ton more Facebook for a lot cheaper. When your mentality is that you're buying a business and you have a long-term mentality going into this, long-term isn't 1 year. It's not 1, 2, 3, 4 years. Long-term, obviously it's subjective, but long-term to me is 7 years plus. So if that's your mentality, if you're, gambling with money that you in 2 years intend to use on a down payment on a house, yeah, you might be losing your mind. But then that's not responsibly investing, is it? When you're investing in the stock market, you have to have a long-term horizon because anything can and will happen. So to prevent yourself from getting harmed in situations when these things do happen, you have to have a long-term mentality. Because in the short term, talking 1, 2, even 3 years, a stock price can do whatever the hell it wants. The market itself can do whatever the hell it wants. But over the long term, stocks will always revert to the fundamental value of that business. They have over the entirety of time. So if I'm picking up Facebook right now for what I believe to be an incredibly cheap price, and like I said, I'll get into that in just a minute. If it goes down for a year straight, incredible. I can build my position out bigger and bigger so that in 10 years, I'm going to have a massive base. And then in 10 years, when it eventually returns to, what its intrinsic value is, which I believe it's going to be much higher than it is today because the company's going to keep growing, I'm going to be insanely wealthy. The hardest and most testing times of any investor are these right now. And I actually don't believe we're in the truly testing times yet. This is the beginning. For a lot of people, this is your first taste of a real market crash, for lack of a better term. And it could get a lot worse. And guess what? I hope it does. Because there's a lot other great companies that I want to buy for cheap prices. Things like Google, things like maybe Apple, which are two stocks that I believe are way too expensive for me to touch right now. But if the same thing happened to them, like it's happening for Facebook, and this happens over the course of the next year, so I keep having my income coming in and I'm able to invest it as it comes in while these stocks fall, that's incredible. The times where you want to be the most aggressive in investing are the times when people say, ooh, the stock market's a scam. I'm out of this. I'm losing all my money. I'm out. So that's my mentality with this market crash. I hope it keeps going down. I hope to keep buying, and I will keep buying. And I hope most of you guys do the same thing. Don't get spooked out. Don't get scared. I'm not selling you anything. I don't have any vested interest in you guys staying in the stock market. I'm not charging courses on investing like some other people on here. I just know for fact, because the stock market has continued to do this over its entirety of existence, which has been hundreds and hundreds of years, that if you just buy and hold through the tough times, you will be incredibly rewarded. Those are the best times historically to buy. The worst times to buy are when things are going bananas. Valuations are through the roof. Everything you touch is going up. It might seem counterintuitive because you buy a stock, it goes up. That means good, right? If you buy when things are at ultimate valuations, like in 2020 when everything was going through the roof, these stocks rose above their intrinsic value. The only way for these stocks to go is back down towards that intrinsic value. That can't last forever. So if you're not an expert market timer and you're not selling these things right at the top, you don't want that to happen, ever. But enough of that, let's kind of get into my projections for Facebook stock, why I think it's an incredible business, and why I continue to keep buying even though it continues to fall. And this is another great point that I want to bring up. Like for a stock like Facebook, when it crashed 25% in that day after it missed earnings, you don't want to go all in right then. You want to kind of dollar cost average your way in. That's why dollar cost averaging is so important, because if you would have dropped, $5K in Facebook stock that day, now you're hurting pretty bad. Whereas if you put $1,000 in, waited, a week or two, $1,000 more, another week or two, $1,000 more, you're in a much better situation right now. And if Facebook stock rebounded, so what? You wait till your next opportunity. Or if you still believe it's a great price, you dollar cost average up. Opportunities will always happen in the stock market. You don't have to, rush and pounce on every single opportunity you see unless you truly believe it's the opportunity of a lifetime. But let's get into my model here on Facebook stock. And I'll tell you why I'm so bullish on this company, why I think it's a great business, and why I think I'm buying it right now for an incredible price. And in 10, 15 years, maybe even less than that, I think I'm going to be incredibly rewarded on my investment in this company. So if we look at liquidity solvency ratios, just absolutely incredible. Green all across the map. Current ratio above 3 in 2021. Cash ratio, which is the most conservative ratio, basically measures their ability to pay off all their current liabilities using just their cash on hand. It's over 2, so they can pay off all their current liabilities twice using just their cash. Debt to equity ratio is incredibly low, which tells me that this is an equity funding company rather than debt, which I'm not surprised at. Typically, a lot of these tech companies, you do tend to see that. Profitability. Let me tell you why I love Facebook. It's all around this. Look at these gross margins. Aren't these incredible? 80% for the past 4 years, averaging 82%. Last year, 81%. Has been slowly declining downwards, but I'm not complaining when I see 81% gross margin. Those are ridiculously high. Gross margin is obviously the money you receive for selling your products, so your revenue, minus your cost of selling those products, your cost of goods sold. Basically how profitable you are on just selling your products or your services. And the net profit margin is basically your margin after factoring in all your other expenses of running your business. 33% for Facebook, so it's just a very profitable company. Typically anything above really 20% profit margin is a very profitable company. So Facebook at 33% is just a profit machine. We go down here, we go to our earnings and free cash flow metrics here. ROE, 32 and 31%. So this company is just a cash machine, profit machine. Any return on equity above really 12% is great. So to see it 32% is just absolutely mind-boggling. And then this is the most important thing to me. Return on invested capital is one of the best metrics for telling how well a business is run. It basically measures how much money are they actually making on the money that they invest into their own business. So on an earnings base, it's 32%. On a free cash flow base over the past 12 months, it's 57%. 4-year average for free cash flow is 42%. Like that's incredible. This is oh man, it gets me going. This is a great business. On a per share basis, earnings per share, free cash flow per share, even book value per share are just increasing, like growing really nicely every single year. We can see trends here, revenue growth averaging around 28% per year over the past 3 years. So you can see that 2021 was obviously pulled forward pretty substantially. Makes sense, ad rates. Facebook makes their money off ads. Ad rates were incredibly high. I know that, being on YouTube. And then share change there, it's relatively flat, but around -1% per year. They're buying back a little bit of shares. They're not issuing shares, which is great. That's what we want to see. We don't want this company diluting us, and they're not. If they're buying them back, great. But we just don't want to see that they're diluting us. Because this company has such a high return on invested capital, I'm actually fine with them not buying back very many shares at all. I'd rather them invest every dime they can into their own operations, into things like the metaverse, because they're going to earn, they've shown the ability that they can earn an incredible return on all this money they invest into themselves. So I want them investing everything. We can buy back shares at a much later date. Dividend, no dividend, I'm completely fine with that too, because that ROIC. And guys, Facebook, invest in yourself. Don't pay me back money yet. Pay me back way later in the future when there's no more growth opportunities. You guys, Zuckerberg, man, go get in that metaverse. So valuation, let's talk about that really quick. We're now trading at a $500 billion market cap. When you look at companies like Apple trading almost $2 trillion. So if we're just comparing it based on potential of the size of a company, we know there's still a lot of room to go. But this is where things really get interesting down here. We're looking at 13 times earnings, 13 times free cash flow, 4 times sales for a tech company. I'm like, are you kidding me? Are you kidding me? You're getting a company growing revenues 28% average over the past 3 years for 13 times earnings and free cash flow. Even if, and you'll see in my model, even if sales, which we fully expect to decline from, where was it? From this, we don't expect 37% to be sustainable going forward. Even if this declines massively and it pulls back to this average, I think we're still getting the stock at an incredible deal at these prices. And I'll get into that right now with my model. So you can see the model here. We got Facebook stock imported here, $187 a share. So here's my model, my low assumptions and my high assumptions for a 15% annual return. If these come true, these are the prices I need to pay for 15% per year compounded going forward. My low case here, I believe to be just stupidly unrealistic. It basically factors in the fact that Facebook falls off, revenues pull back massively, people really stop using Facebook, profit margins drop way below they ever have been. This company doesn't buy back any shares and it trades at 12 times earnings. Do I think any of these are going to happen? Absolutely not. But as an investor, what's our main job here? Like Warren Buffett said, your number one rule as an investor is don't lose money. What's rule number 2? See rule 1. So in our projections, we want to factor in the absolute worst case that we can see happening. For me, I see revenue, like I said, 37% over the past year. 3-year average was 28%. I'm saying for the next 5 years, it's going to be 10%. Tell me if that sounds realistic. And now profit margins over the past 4 years, 30%. Over the past year, 33%. I have it dropping to 28%. They're going to stop all their share buybacks and then trade at 12 times earnings. And it's a buy at 161. So it currently is a little far off from where it is today, but what kind of return will we get buying the stock today? You're looking at around an 11% annual return. If this worst case happens, you're still going to make 11% compounded going forward over the next 5 years. That is historically outperforming an index fund. So you guys tell me, does that not seem stupidly conservative? And you're still going to get 11%. So let's flip that back to 15%. And let's talk about my high case here. I also have revenue declining in my high case to 14% growth per year for the next 5 years. Yeah, for the next 5 years. So again, 28% over the past 3 years, declining to 14% per year for the next 5 years. Profit margins stay at their average, 30%. They don't get any more profitable. And then they continue the buybacks at negative 1%. So they don't increase buybacks, they just continue at the average of what they've been doing. And it trades for 15 times earnings, which is the historic multiple that the stock market typically trades at. So it has them trading at a fair price in line with the rest of the market. No one's paying a premium for Facebook. It's not trading at a discount. It's just trading at the average. I don't think any of this is aggressive. I think this is very realistic. If anything, a little conservative. And for all these, if these come true, for a 15% return, this is a $150 stock. So if these come true, what kind of return are we going to get if we buy it at $187 today? Well, we're going to get 21%, around a 22% annual return going forward, little over 22%. You're absolutely crushing it. If you can get a 22% annual return going forward, you can more than double what the market's produced over the next 5 years. And you keep buying the stock as it potentially keeps falling, and you're locking in an even higher return. Guys, this is what builds people wealth. Buys like this, stocks like this, in opportunities like this. Could something happen to Facebook? Could everyone stop using Facebook, Instagram, WhatsApp, things like that? Could TikTok take over the entire world? Sure. Is it likely? People stop using Instagram. Facebook, believe it or not, is still the #1 global social media platform. Yeah, it seems like, nobody under 30 uses it anymore. Believe me, I'm 26. I don't use Facebook. Actually, I don't use Instagram either. I don't use any social media. But Facebook is still the #1 most used social media platform. And what we don't see as Canadians, as potentially Americans, because there's 5 or 6 of you guys watching this, what we don't see in our Western society is the rest of the world. All these developing countries, they all use Facebook. They all use WhatsApp's incredibly popular with these developing countries. And the thing is, the opportunity here is that most of Facebook's ad revenue is generated from its Canadian and American users. What's going to happen as the rest of the world, which still uses Facebook, which uses Facebook actually a lot more than we do, what's going to happen when these people, these countries continue to develop? These people get richer. People are going to pay more money to advertise to these people because they're going to bring advertisers more money in return because they have more money to spend. So Facebook isn't just going to die eventually if, the Western society of Canadians and Americans switch over to other means. Instagram isn't going to die because the rest of the world still uses this. And on top of that, everyone still uses Instagram. It's still Facebook and Instagram are still the 2 most popular social media platforms. I think Snapchat's actually up there too. And then you think about an opportunity for Facebook that the metaverse represents. And now people roll their eyes, and I do too. The metaverse isn't really what everyone thinks it's going to be. It's not all, go to virtual reality parties. I know, I thought that too. There is that side of the metaverse that does exist, but that's kind of more like the meme side of things. The real metaverse is just basically the social media realm and then integrating that into your day-to-day life. WhatsApp is just this massively underutilized platform for Facebook. What they want to do with this eventually is basically make it a payment processing platform so that people all across the world can send money seamlessly just over WhatsApp. Have you ever tried transferring the money, any money to somebody in the States? We can't use Cash App. They can't, e-transfer us through RBC. It's a nightmare. It's hard to do. Everyone has to use things like PayPal, which is just terrible, and they take a huge commission of the money you send. And even something as simple as just changing your name to Meta. It seems silly at first, but when you think about it, they're branding themselves around this new thing going forward. They're going to be the thing that everybody thinks about when they think metaverse. And like it or not, that's marketing at its finest. So when we factor in all these things, let me flip it back to 15%. You can see that my weighted DCF price here, factoring in both my low case and my high case, leaning 60% towards my low case, is saying this is a buy at 196. This is the ultimate kind of thing that I use when I, factor my projections. This is a really conservative metric that factors in both cases but leans more towards the low one. So it kind of creates a midpoint in between these assumptions, but leaning more towards the low on the low side. So for me, any price below 196 is a great buy for Facebook. And it's the stock, like I said, that I'm buying most actively right now. Could all my theories be wrong? Could Facebook potentially blow this metaverse thing completely? Yes. But looking at things like their return on invested capital over history, I have every reason to believe that every dime they invest into future ventures like the metaverse are going to produce me as a shareholder great returns. And that's why I continue to buy the stock and why I'm not worried about a market crash going forward. In fact, I welcome it. I'd love to buy Facebook for 140. I'd love to buy Facebook for 120. I don't believe I will. I don't believe I'll ever get that opportunity. I hope I do though. And I hope I get similar opportunities to buy other companies like I am right now for Facebook. I would love an opportunity to buy, Google. Google is one of my favorite companies in the entire world. I would love to buy Google as cheap as Facebook is right now. And I can only do that in a market crash, unless Google fundamentally changes their business, but then it's not Google anymore to me. If the market crashes and every single stock plummets for no reason, I can buy Google for cheap. And you guys can too. And we can all just get incredibly wealthy together if we keep buying. But that's it on my thoughts on the current state of the market, as well as Facebook stock. Let me know what stocks you guys are really bullish on. What stocks are you, one, buying right now heavily, and two, what stocks do you want to fall even more? Canadian stocks, American stocks, whatever. I'd love it if Shopify kept falling. So let me know. But appreciate it again, as always, and take care, guys.